in the car today for personal reasons, but the market nonetheless is giving us things to talk about. And we'll start with the technicals. And we're not technicals guys over here. We sometimes use broader technicals to identify how people are thinking, behaving, and just using it for general insights. You don't leave any data off the table. So today we saw the market act very choppy in the morning. It was up, then it came down. It was like, okay, normal down day, nothing crazy. Then it stabilized right at the flat line. And the way I'm interpreting this is the market's very comfortable right now, very comfortable. There's not a lot of headlines. Nothing seems to be shaking the market. We've had these crazy pipelines. It's possible they do have some connection with the foreign adversary. Nothing's happening there yet. The market's not moving on that significantly. So it seems like no bad news can shake things up to the downside. And I think today's technical action shows exactly what that means. There might be some sort of chop, and then some leveling, and then maybe some levitation. And maybe there is some upside to this market. That is entirely possible and entirely reasonable to expect. But I wouldn't be too all in on that camp. And not to say that you shouldn't be positioned for additional upside. I believe that's the way the market's going to go. And I believe that's the way you should be positioned. But there are certain forces right now that are unusual that make it so having options, in the time frame of moderate to leap options, while I love those options and those are my favorite type of options, it's a little bit of a scary environment for those, depending on where you have them, everywhere except, I would say, oil and real estate, because of the Federal Reserve. The market is being propped up, in a manipulated sense by the Federal Reserve, the bond market keeping interest rates low, and there's no reason that interest rates should remain low and go down. And, everything would tell you, besides the Fed, they should be rising, indications of inflation. And I'm not even in the camp saying that, the entire world economy is going to crash and there's massive hyperinflation. I don't think hyperinflation is the most likely outcome. I think inflation and slight decreased purchasing power of the dollar is very likely, given there are more dollars. It's just the way it is. So that is not being accounted for in the negative sense in the market. It's definitely being accounted for in the positive sense because stock prices are rising, earnings are growing. We're getting the positives, we're not getting the negatives. And that is not sustainable. That just can't work. It's going to exacerbate the situation. And for that reason, the market can stop being so manipulated at any moment and feel adverse effects come in. And that's why I would caution against these more moderately timed options. Now, it's possible they print. I do have these options, but I have them selectively in oil in areas that I think will go up regardless of the outside environment, just focusing on the commodity price. So be wary of those things and adjust accordingly, because it does seem like interest rates can rise at any moment, even though it does seem like they are on some sort of downtrend. And, who am I to say that downtrend is going to stop? There's no reason for it to go on, but it's going on. Well, there's a reason, and it's a manipulative Fed. So as long as the Fed keeps doing what it's doing, the saying goes, don't fight the Fed. And it seems like money supply is the number one indicator of market performance, and money supply is continuing. So, it's really hard to say what to do here with that. My stance, stay long cyclical stocks, remain reopening, have some growth that you like that has the potential to 5 or 10x. Because even in an inflation environment, people are saying that growth can't do well. I think Apple and Amazon and Facebook can't do well. But I think an emerging technology that's going to grow at an annualized rate of some, 50% can still do well. So I would hold those stocks, but make sure they're well priced and position well, and you should be okay. Just remain calm, hold the stocks, be knowledgeable, be wary of the fact that interest rates can really throw a whole monkey wrench into things, and just be prepared for that, and don't be totally caught off sides by that possibly happening in the future, because at some point these rates are going to rise. They can't stay where they're at. The You know, the Federal Reserve has this lever. If you've seen the Ray Dalio, how the economic machine works, they have this lever. Right now, it's all the way down. They need to eventually raise it back up, otherwise problems happen. So we will see what happens. And until next time, peace out.